Bitcoin specifically is going to be fine in any scenario, but I like the mama bear Fed, so hopefully the president will pick the mama bear.
Scaramucci is, unsurprisingly, still very bullish on Bitcoin, but not just for the reasons the average retail investor might think. He points out a key structural shift. The institutional capital is finally here. 3 years ago, a crypto conference like this one would have been dominated by blockchain founders, retail investors, and early-stage tech startups. Now, it's filled with suits, C-suite executives, asset managers, and institutional allocators who are taking Bitcoin and digital assets seriously.
That was the plan, Andrew, and interestingly enough, under the Biden administration, no Fed officials accepted the invitation last year, but under the Trump administration, we've got 3 or 4 of them, including Fed Governor Waller, coming. So we're very excited about that. We've got a gathering of about 500 people, but lots of C-suite people here, so we're hoping to make this an annual event. Obviously, outside of that decision-making authority, and listen, I mean, President Trump picked Jerome Powell 8 years ago. I think the chairman did generally a very good job. It's an imperfect process, of course. Not saying that mistakes were made, but I think he's done a generally good job, and I expect the president to pick another good Fed chair when the time comes. If you get an overheating in inflation, you're going to disrupt all of the ways that we consume. We're going to disrupt the housing market, which you guys were just talking about. I would prefer mama bear. I think Bitcoin specifically is going to be fine in any scenario. But I like the mama bear Fed, so hopefully the president will pick the mama bear.
Anthony Scaramucci's view is crystal clear. The financial system is evolving, and Bitcoin is at the center of it. From macro policy shifts and new Fed leadership to Bitcoin ETFs, stablecoins, and the rejection of CBDCs, the future is being built now. Institutions are no longer on the sidelines. They're not just buying Bitcoin, they're building infrastructure around it.
Bitcoin markets over the last 5 years, I think what's happening now is lots of consolidation and institutional adoption. So if you went to a conference like this 3 years ago, it was mostly retail investors and CEOs working in the layer 1 blockchain space. Today, it's lots more institutional investors. So that's finally starting to happen. If you look at the numbers on something like the BlackRock ETF, the IBIT ETF, you can see now, Andrew, there's lots of institutions coming in. So what's interesting is that some of the whales have been selling. So I know I've seen your interviews with Michael Novogratz and the 80,000 Bitcoins that sold last month. And so there's a consolidation story happening. There's a change of ownership story happening. But I think we're going higher just because you just look at the math. There's just way more demand than issued supply of Bitcoin, or existing overall supply in the marketplace. So we still maintain our price target between 180 and 200,000 by year end, and I think that's a cautious price target. By the way, I think there are people that are way above us those levels, but I just think it's a function of buying and only 450 Bitcoins being made by the network per day. They're all linked to Bitcoin, IBIT being the purest link to Bitcoin. I think what Michael has done is absolutely extraordinary, as evidenced by all of the copycats that are out there. And again, not just copycats for Bitcoin, but for Ethereum, Solana, Avalanche, and others. And so it's different strokes for different folks. Michael, you're probably getting a little bit more of a kick to your Bitcoin exposure. IBIT, I think it's a pure play, and I would just point out that places like JPMorgan will actually lend on IBIT, and so it's a very secure asset that people trust. I own a lot of Bitcoin and hold it in storage, Andrew, for myself and for Skybridge. And so there's different ways to approach it. I think the institutions will likely go into the ETFs, and of course there's a lot of institutions that quote unquote can't own Bitcoin, that they end up owning Michael's stock or synthetics like that.
Skybridge's $200K Bitcoin target may sound bold, but it's grounded in supply mechanics and a growing institutional wave. Meanwhile, stablecoins and private innovation are laying the groundwork for a more efficient, borderless financial system. One, Scaramucci believes, should remain out of the government's hands.
Is announcing this morning their own stablecoin, so you can add that to the mix as well. Congratulations to the state. I just think that that's generally good I share Secretary Besson's view of this, that that's generally good for the U.S. dollar. It means more treasuries, more short-term treasuries, demand for those securities. But I also think it's going to bring a wave of technological innovation. We, at our last conference in Bermuda, we did a drop of stable coins into people's phones where they could spend, I guess it was $100 at the different tourist shops on Front Street in Bermuda. And it worked beautifully. And I think you're going to get to the point where we're transacting using stable coins. It may bypass some of the credit card fees and some of the other ancillary third-party confirmation fees that we've charged historically in the marketplace. So I generally think it's very good. I think those companies will consolidate. And I think one of the discussions here at the Wyoming Blockchain Symposium is going to be about a central bank digital currency. And I stand with President Trump on that. I don't think we need that. I think it could be, from a libertarian perspective, too intrusive from a privacy matter. And I think the private companies are doing a great job in this area. And so I'd like to just stay in the private company realm as it relates to dollar-based stablecoins. They're not allowed, because if you look at the last legislation, there's no yield on the stablecoins, Andrew. So if you're converting dollars into a stablecoin, there's going to be a spread there for those guys naturally. I don't think the competition is going to impact that, unless we switch up that yield mechanism.
Scaramucci hints that the market will demand change. If a competitor offers yield, the playing field could shift dramatically. Either way, he sees continued consolidation in the stablecoin space, with only the strongest projects surviving. The theme of the conference, and Scaramucci's closing thought, is clear. Bitcoin is growing stronger, stablecoins are reshaping global payments, and the institutions are now fully engaged.